Hi everyone. Today let's talk about retail sales. Then we'll take a look at bank earnings starting with JPM Chase. Then we'll take a look at the charts. Then we'll take a look at my results for the day and my thoughts going into tomorrow's session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So retail sales came out today and it was down 1%, definitely not what you want to see. And that was a sharper decline from the 0.2% that we saw the previous month. I mentioned last month we saw sales at gas stations decline 3%, but online sales were up 1.9%. And the declines that we saw in this retail sales is further evidence that the economy is cooling while consumers continue to grapple with higher interest rates and the longer-term effects of inflation. And to finish off here, they mentioned the Fed comments about the mild recession coming later in the year, and that there's certainly a possibility that we see retail sales rebound in the coming months. But of course, this is all hypothetical until we start seeing some data. JPM Chase, on the other hand, did extremely well on their earnings, reporting $4.32 compared to $3.41. Revenue was up massively, over $3 billion, higher than expectations. And net interest income is expected to be $81 billion this year, $7 billion higher than the annual forecast. Profits jumped 52% to $12.62 billion, or $4.10 per share, in the first 3 months of this year, and that includes an $868 million loss in securities. So overall, the bank is doing extremely well. JPM Chase is one of the best in brand, so you can't make this comparison to all the other banks. But if any of the other banks are doing as well as JPM Chase, then hopefully the banking crisis is potentially going to go away. And looking at the earnings calendar here just for a moment, you can see we're actually doing quite well. United Health beat expectations on the top and bottom line. So did Wells Fargo here. BlackRock beating on the bottom line but not on the top. Citigroup beat on the top and bottom line. PNC Financial beat on the bottom line but not on the top. And really, I was hoping to see First Republic Bank. We didn't get that information here today, so we'll have to see when that comes in. That's going to be another interesting one based on the banking crisis. Moving over to the charts here, we'll take a look at these real quick. We'll go into a deeper look at the charts on Sunday's video, but real quick here on the S&P 500, you can see we rallied up in the morning, hit that resistance line that we talked about yesterday, fell all the way to the 200 SMA on the 15-minute chart, which is right in line with the 9 EMA on the daily chart, and then rallied high volume at the end of the session, big bullish movement. The chart did step down on momentum, which is interesting. RSI stepped down as well. Candle of indecision on the daily chart. Still watching this rising wedge type formation that we have here. But until this breaks down, you kind of have to stay bullish. We continue to make higher highs, testing that upper resistance line here. And like I said, right now we're kind of in a holding pattern, but still drifting upward. Moving over to the NASDAQ here just for a moment. Similar thesis, wick to the highs, hit that resistance, hit the 200 SMA on the 15, rallied into the close. Lots of volume here at the end of day. You can see some follow through after hours, which is interesting. Daily chart, similar thesis, candle of indecision. Momentum, it stepped into more bearish territory, but you can see this structure here is still bullish. We're still watching it. Does seem to be wedging up a little bit. But like I said, you have to respect it. Certainly could go higher and break out to these upper levels around 321 like we've been talking about. And then if we break out from there, then we're looking at about 324.28. So potential for upside here still. Might see a pullback in the pre-market hours on Monday, just like we did here this morning. Based on the rally into the close, dip into the pre-market, and then a rally into the open. That would be interesting. But right now, still neutral to bullish here on the NASDAQ based on this structure. But keeping an eye on these bearish signals on the daily MACD and daily RSI. Moving into the Russell and the Dow, similar thesis, moved higher at the open for both, dipped into the midday, rallied into the close. These were definitely not as strong as the SPY or the NASDAQ. Did find good movement into the end of day, but did dip much lower and didn't finish nearly as high as the other ones in reference to their high of day. Similar here on the Dow. Dip, found support, rally, momentum, flat on both. RSI, somewhat bearish, but kind of neutral here. Moving over to Apple and Tesla, similar thesis. Basically went sideways today, looked a little bit stronger, didn't dip nearly as much as everything else. Tesla, this is a true wedge now. We talked about that before where we had a high, a low, a lower high, and a higher low. And now we're still stuck in the middle of that wedge. waiting for some clear direction. RSI and momentum are both slightly bullish, but stuck in the middle of this wedge. Moving over to staples versus discretionary here. Got 3 legs to the downside on the hourly chart. This is usually very bearish. Once you get 3 legs, usually that means you're going to get a little bit of a pullback, which we did do, and then you'll probably get that follow through. That's what I'll be looking for on Monday with staples. Moving over to discretionary, we're retesting area of supply, finished in that zone right at the 147 level. Definitely interesting to see. Wicked it right at the end of the day, pulled back just 10 cents. We'll see what happens at the end of day. Tons of volume in that candle as well. Lots of volume at the end of day yesterday, and lots of volume once again at the end of day today here on discretionary, which is interesting. And like I said, everything was rallying pretty aggressively into the close, so something to keep an eye on. If this can push through here, that means we're probably risk on in the markets, and that's how we need to be trading on Monday if we do get this follow through. Moving over to stocks above 20 and 50-day averages. 20-day average got a pretty substantial move down here, much lower than what we saw across the markets. So less stocks participating in this rally. That's definitely a bearish indicator here. But right now, the 50-day average is still holding up fairly strong. So potential start for some bearish movements, but we're not seeing that quite yet on the longer term charts. Moving over to the dollar here on the hour and the 12-hour, you can see huge move up. Lots of momentum to the upside, got very close to the 200 SMA on the hourly chart. But looking at the longer term chart, this just looks like a pullback, hit that 9 EMA on the 12-hour, and certainly looks like it could get rejected from here and go lower. Might get another leg up, push into this zone between the 21 and 55 EMAs, and then get a rejection. Maybe hit this trend line. That would be interesting. So short-term bullish, definitely have to watch that, but longer-term trend is still bearish here on the dollar. Moving over to the VIX here on the hour and the weekly chart, you can see we're watching this long-term weekly trend. Broke through there. We're going lower here. You can see that on the hourly chart. Momentum is bearish, deeply oversold on the hourly chart, moving lower on weekly RSI. So right now the bulls are still in charge for equities, and you have to pay attention to that. If we do see a pullback on Monday and we start moving higher above the 20 level, then we might be seeing a little bit of a resurgence to the bear side. But right now, everything still looks bullish here on equities and bearish for the VIX. Moving over to my accounts just for a moment. Typically, these are days where I do better, where the market's down just a little bit here, down 60 cents. And you can see I did make just a few dollars here on my individual account, which is nice. Lost a few dollars here on my IRA, not too bad though. IWM was down $1.65, which is about 1%, so pretty big move down on the IWM, and I definitely didn't lose 1%, which is nice. Looking at positions, you can see I sold a 176 here on the IWM right at the end of day. IWM is rallying into the close, and I wanted to take advantage of that. And like we talked about, it is up after hours. Looking at the NASDAQ positions, I am still bullish. I have 2 puts for Monday, 315 and 316, but I did sell 1 contract here on the call side, down just a few dollars. That might hurt me a little bit on Monday. We'll see how that plays out. It is all the way up at 321 for 37 cents, so not super bearish there. But I thought it would be a decent position considering the chop that we've seen, and even today had quite a bit of chop. So if we get a little bit of a pullback, this shows just a little bit of a profit. Might close this position, and then we'll see if we get the rebound. Overall, still somewhat neutral to bullish. Let me know down in the comment section what you thought of the markets, JP Chase earnings, or retail sales. Everything is definitely pretty choppy. Things are definitely pretty choppy right now. So we have to continue to stay on top of the markets and the news announcements. Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.